Hey, thanks everyone for sending in your questions. Let's see what we can answer today. Karen from Westerville writes, when should I begin taking Social Security? Karen, that's a great question. Well, Social Security is not an easy thing to understand. Just recently I was helping a couple figure out the best time to take Social Security. Now, they were 61 years old. They were thinking about taking it at 62, which is the earliest you can take it. Well, we did an analysis and discovered that it makes sense for them to wait based on their other savings, other assets, their portfolio, retirement accounts. It really made sense for them to take it at their full retirement age, which is 66 and 5 months. Now, if you open your Social Security statement, Karen, you could see in there when your full retirement age is, which is the highest amount you'll get until or unless you wait to take it at age 70, which from your full retirement age to age 70, it'll grow by 8% a year. Your payout will grow. So in your answering your question, I'm not sure for you, but we have a way to determine that. And one of the things we do is we have everybody give us a copy of their Social Security statements, which, by the way, you can go to ssa.gov, that's the Social Security website, scroll down a little bit. On the left side of the screen, it says My Social Security. You click on that and you can get a copy of your statement, because many of you are learning, and maybe you too, Karen, that you're not getting your statements mailed to you every year. So Social Security is very complex. Of course, at 65, you have to remember, and it wasn't a question, Medicare will be the next thing. So thanks for your question, Karen, a great question. Now, Natasha in Dublin asks, thank you for answering our questions, Don. I'm curious to know if paying off our mortgage is required. Great question, Natasha. One of the things I do with everybody I sit down with is I have you prepare a budget. What are you spending on housing? What are you spending on groceries? What are you spending on healthcare insurance, car insurance? What are you giving each month to your church? Why do we do this? Because I want to know if you are spending $5,000 a month, for instance, and it's inflating at 3%, what is it going to cost you at 85 years old to live? Now, Natasha, I don't know how old you are, but having a mortgage can be good or not good. It really depends on your situation. So in your case, I would find out, what are your income sources? When you retire, will you have Social Security? Will you have a pension, like Greg asked about? And then we look at how will that cash flow work for you? Will it affect you to have a $1,200 mortgage payment, or will it not? So retirement planning and having a mortgage really will depend on how much you've saved and can we cash flow, meaning every month when you pull from your savings, will you have enough to last to your 80s and 90s and even beyond? Okay, so great question, Natasha, and I hope that helps for today. Jim in Dublin, can you do a segment on taxes and the new tax plan and what I should be doing to avoid paying more than I should? Great question. So here's the scenario with the 2018, the new tax law. Jim, even our accountant is still saying, boy, we're still learning this tax code. What's changed is the exemption for married and single, how much you get to write off your taxes right away. What we're not sure is how it's going to affect your investment income, your retirement income when you take it out. Again, we are retirement planning specialists, so we're looking at all the money you and everybody else has saved in their retirement accounts. How are you going to get it out? Case in point, I have a client that we did the math for them a few years back, and if they were going to take the money out of their retirement plans based on the government's suggestion or the way they actually make you take it out, they'll pay more taxes than all the taxes they save putting it in. So taxes in retirement could be very significant for you, and you might even find your taxes go up. Well, you might say, well, what do you mean by that? Well, all the years you paid into your retirement account, you're getting that money tax deductible, right? In other words, to save $1 in your retirement plan or an IRA or 401k or whatever, it only costs you 85 cents because you got it in pre-tax. All that money grows tax deferred. You don't owe anything on it, never paid a dime on it. But when it comes out, it's all taxable. So you have to take it out in a very concise manner, and this is one of the things we help people do so they pay the least amount of taxes over their retirement. Now, If you're still working for a few more years, it may make sense to keep paying into your plan. And if you have an employer match, it might make sense to keep doing that. But this is a very detailed and delicate situation that I think we could do a complete webinar on, or a more in-depth discussion here on where you're watching us. Thanks, Jim. Great question. So that's it for today. Thanks for sending in your questions. Remember to submit your questions every week. We're going to answer them every Thursday. Submit them on Tuesdays, answer them on Thursday. And as always, reach out if you have any other questions that maybe you want to talk privately via email or text. And I know my great assistant Renee has provided that information here on this channel. Thanks again. Have a great day.